All right, folks, we're back. If you see the familiar face, it's because we are round two of the PetroNerds podcast with Mark Rossano. We just recorded a podcast on Monday of this week. Today is Friday, October 22nd, and we really had to do this. October 22nd, 2021. WTI is 83.68, nat gas is 522, and Brent is pushing that. We're looking at 85.48. We may be pushing this 86 handle today on Brent. But I brought Mark back because we basically weren't able to properly finish our conversation, and we sort of cut it short to a degree. It was very good, and we're going to get a lot of promoting out of this. We've already had some feedback that on the podcast, so it was great. But we sort of closed the last 15 minutes talking about the macro, and Mark and I could easily go on just on offline on talking about a number of things. And I figured, why don't we just put it back on the podcast? Because I would love to talk macro China and sort of recap this energy crisis and really help listeners understand why is the macro, why do I rant on about China so much, and why do I bring it up? And more drilling has pointed out to me that sometimes I need to put bookends on my China comments because I just sort of interject them and throw them out, and that's very valid. So we're going to sort of explain this China piece of why this matters. If you are drilling an oil well, if you are the driller or you're the completion engineer, or you are the operator, why does the China crisis actually, the Evergrande issue or anything going on in China actually matter to you? And that's because it's eventually going to come down the pipeline and potentially hit prices. But we'll get into that. So that's one, macro China recapping. Two, I would like to talk about inflation because it's obviously a very, very real thing. And Jerome Powell has made some comments. We've had lots of stuff coming out of the Fed. We've had lots of folks on CNBC, Bloomberg, and the like talking about inflation, and we're certainly seeing mortgage rates actually tick up. So there's a lot going on with that, and I think the not only the consumer price index, which we've seen, and we've seen the inflation numbers from the Bureau of Labor Statistics, but we've actually seen the Fed Beige Book came out and said, hey, prices are high. So this whole transitory thing is baby's going out with bathwater, and there are a lot of implications for that, especially given that the White House doesn't look like they're going to be able to pass half the stuff that they want to. And the last thing I would like to talk about is something that's been an evolving topic. We're certainly not going to solve it on this podcast, but it's something I'm fascinated by, and it's really this investor pressure and how it's impacting the role of investors and how they're impacting the market, not just from the public side, but also the private side, and how that actually impacts how people are spending money and investing in the space, and partly why we actually are seeing a shortfall of investment in E&P, and why we may have a shortfall for gas and oil globally, potentially, if people aren't investing. And I think it's this, I brought it up with the podcast with Chris Wright, and really sort of, kind of yelled at operators for not having enough balls to basically just go to town and drill for oil if that's what you're going to do. And I think public companies are sort of caught in this tricky spot about what they actually want to do, and they have this pressure or this ESG monkey sort of on their back that they have to deal with, but it's not super quantifiable. So with those three topics, hopefully we can talk about those. And I know we'll probably go sideways on a number of different things, which is totally fine. And we'll recap it. But let's go back to this and sort of just start where we left off in the last podcast, which is the macro China piece. I know you have a lot of thoughts on this. I think you made very clear that revised 4.9% GDP number was a load of hogwash. And it was probably a lot lower. And I think maybe actually talking to people about that, when there's a lot of perma bears on China, I've been certainly one of those folks that if you've studied China for many, many years, you just don't have a lot of faith in the data, because you know that it's massaged. And it always comes out to what they say it's going to come out to. So it's hard to believe it. And then you actually, if you do, there are actually a few really good podcasts out there. South China Morning Post, not perfect, but they actually do give you like some anecdotal information of stuff that's on the ground inside China. And when you start listening to and understanding all that, it just doesn't add up. So what you hear from what Bloomberg's reporting at night, some of their articles are great, but it just doesn't seem to add up. So do you have any sort of data points or thoughts on that? Just that 4.9% GDP, and then we can dovetail this into the Evergrande thing, which actually has a bond payment due this weekend.
Yeah, so thanks for having me on again. There's a lot of I dedicate one of the whole segments of the Econ show to Asia, with about 90% of it probably going to China at least 3 times a week. And it's because it's obviously such a behemoth when you look at the commodity space and what's going on. And on top of the ones that you had mentioned, Trivium is another one that is fantastic in putting out some real-time information. And then China Pboc is another good one with and they put out a lot of good things that you have to pay for, but also they're good to follow on Twitter because they do have a very good handle on what's happening on the ground. And now one of the things that you talked about when you look at, it's easy to be bearish on China, and that's always been the case. And when I've been investing in China, this, like, essentially when I put out this whole piece on February 11th talking about the Chinese debt bubble, the biggest pushback to me was, Mark, this is great, but this is 2011. It's like, you're absolutely correct. Everything I said in this February 11th, 2021 podcast, I could have said in February 11th of 2011. And the difference is
basically every year between there.
Right. And the difference is timing. Is it 101 Go cities or is it 10,001?
Yep.
Is it a debt to GDP level of 100% or 300%? It all comes down to running room and who can you get? Who is your buyer of last resort? So some of the numbers I'm going to throw out just to keep it nerdy. When you look at the Chinese property market, in like the largest asset class globally. So when you think about the Chinese property market, it's 60 trillion US dollars in this entity. To give you an idea, the US is 34. Now let's take it to who is your buyer of last resort? And for them, that has been the consumer. If you look from 2009 to 2021, China has really been trying to get the consumer involved. And then that increased last year with the dual circulation strategy, increasing local consumption. Then they doubled down on it, well, I should say tripled down on it in 2021 with common prosperity, making sure everybody has enough and making sure that they can all spend. So then when you look at the housing market represents 62% of household assets. Now just to compare that, in the US, it's 23%. So now
just hold on those data points, because they're really, really important. And you throw out some really, really good data points, because the numbers are basically, when people say housing, the housing market, like the property sector, we talk about housing, we say, why does it matter? It's the property sector in China is roughly 1/3 of GDP. So that's 60 trillion US China numbers. And I think the people aren't completely certain of that 60, that you just threw out the 62% number, that 62% of wealth of households is in these homes. And I mentioned this, there is a good, I think it is the Inside China podcast several weeks ago. There was some good commentary on a breakdown of these numbers. I've heard the numbers range pretty wide of how much of the actual homeowner, like how much of them have mortgages because they didn't historically, how much of them are sort of bought outright. And but we do know that many Chinese don't actively invest the way we do in the stock market and equities, so that it is housing, because housing prices have just gone up and up and up. And so that if your average Chinese citizen has 62% of their wealth is in their household, that's a problem for a $60 trillion market with 1/3 of your economy.
And it's interesting because it's not even just their own home, because Evergrande, just to use Evergrande as an example, they'll issue essentially a REIT, but they'll do it directly to consumers. So they can go to a consumer and say, hey, we're going to guarantee 12% growth if you give us X. And then and then you buy the right to this building. So you could live in building A and they're putting up building B, and they'll go to all of the homeowners in building A and say, hey, do you want to participate in the raise and the financing of this? And it's essentially just a REIT that is going directly to the consumer. And a lot of companies do this in China, not just retail, real estate. They goes across multiple different pieces. And this is where you get this leverage and this torque of, well, how are you going to pay people back? Because when you talk about a bailout, the question is, who are you bailing out? Are you bailing out the debt holders? Or are you bailing out the consumer? Are like, what part of the bailout? And like you brought up the interest payment, which technically they've now set aside that 83.5 million for payout.
They say that, or the
no, exactly. They say that. I need to see the wire though. Exactly. I need to see the wire on Sunday. I want to see the number transfer, because I was like, that's convenient. It's like, this is your last, got to do this. And this is an interest. So Evergrande is the second largest property developer. There's many, and they have subsidiaries underneath them, which have already had trouble. Fantasia is a subsidiary, I believe, of Country Garden. Country Garden's the biggest one. You're hearing about Evergrande, and people keep saying, is this the Lehman moment? And I keep saying it doesn't matter whether it's the Lehman moment or not, because you're not going to get the timing right, because it's China. But it's all this together. But it's those
those, so the local government debt is a huge problem, right? And the local
Right.
governments are basically at this point to where they can't really lend anymore. They can't really give any more to these property developers. And they essentially, if Xi Jinping in China actually wants to keep their economy roaring, they would have to keep this going. And they would end up creating is they would further be creating this asset bubble. So you end up
Right.
having local governments who can't continue to lend, and they can't. I mean, they've sold land to the property developers. The property developers have not necessarily paid them for that land. The homeowners who have not had a flat or an apartment actually built have already paid Evergrande and all these other property developers. Construction guys are the people without jobs. That's a real thing too. You have to do some digging in the weeds and listening to various podcasts and nerding out to hear the people who are unemployed. We're already hearing that youth unemployment in China is massive. And it's skyrocketing. And we have major issues with the youth side and not having enough kids and babies and everything in China, which is their own fault. But that's a whole nother issue. But the reality is, like, you have if your property development is 1/3 of your economy, and put this in context, in the US, it was only 1/5 during the housing crisis. So our property sector, when you say that 34 trillion at the US at the time when we took down the global economy, it was only a fifth of our US economy, of our GDP. So it's a much bigger entity for the Chinese economy. And I say that not to say like China's Evergrande is going to take down the global economy. It's that it represents such a big portion of their economy, and it's a big piece of the engine that drives all of this. So it's driving the construction, it's driving people's jobs, and that's how people are going to work. And there are a lot of people that are not employed right now because of this, or not getting their flats or apartments that they already purchased. And China's just trying to figure out who's going to get paid back first, or who's going to get paid back at all. And I don't think it's going to be the foreign bondholders for this, $83 million.
You bring up some good points, because when you look at Evergrande, and I said it from the beginning, it's not the Lehman event. Like, we didn't know the Lehman event was going to be the Lehman event till it was the Lehman event.
Exactly.
And the reason why is because when I was a baby on Wall Street at the time, Bear Stearns caught people by surprise. Like, that was shocking. That was, oh my God, like they're really not going to open their doors on Sunday. And Morgan Stanley, I was at Morgan Stanley Investment Management at the time, and we had a huge amount of connection just based on what we had lent to Bear Stearns, what they owed us, what they had sent us in collateral. And if Bear Stearns went under, so did Morgan Stanley at that time, because the collateral they had given us was so far below investment grade that in a fire sale, it wouldn't have been even close to covering what our exposure was. So that was something that was shocking. And then, JP Morgan obviously stepped in. The market kept rallying for another 6 months. Then Countrywide went bankrupt. Everyone assumed, it's been ring fenced. And then that whole sector rallied 30%. Some of those bonds went up over 100%. And then Lehman happened. Now, Lehman, for those that were in Wall Street, Lehman was the most telegraphed, most expected event in terms of who was going to drop next. But that was what kind of caught everyone. Was like, oh, this is bad. This is expanding. And then that became the Lehman event that we know it to be. So when you look at what's happening in China, is it going to be Evergrande? Is it going to be Fantasia? Is it going to be, like, which one is going to be the one to drop us? And the answer is, we don't really know. But you bring up a great point on local financing. So there's two vehicles that were created: the special purpose bonds, and then the local government financial vehicles, or LGFVs. So when you look at what was used during this time period, which is why I say 2021 is different than 2011, when you look at that new leg of investing that they were forced to do from 2016 to 2018, and by forced, I mean the stimulus that came through at the end of 16, you saw this big push into a lot of these bonds, a lot of these new, like as you said, they had sold to property developers. They were going to build all this infrastructure. And then by the time 2019 came around, all of these bonds and these vehicles are being financed with tax revenue. And they're being financed with tax revenue because they can barely cover the interest expense with what was being thrown off by these projects, let alone principal. So now you have a situation where these governments were struggling to just finance just employment. So now the PBOC has created avenues to inject cash directly into them and essentially finance these vehicles that are completely underwater. So when they came out and said, you have to keep lending now, they're like, well, we can't because you were already supporting us. We then went through 2020 and you cut taxes, you cut tariffs, you cut all of essentially what we needed to just stay afloat. You're now backstopping us. But now look at tourism revenue. Look at revenue in general. And that comes to what you're talking about with the consumer and how damaged is the consumer. And they were never really strong to begin with.
No,
and now they're continuing to weaken.
Yes. And they're continuing to weaken. And that consumer is the other piece of why people tend to be these perma bears in China, is because you have no good data on the consumer. I think we mentioned in the last podcast, if it wasn't on there, if it was offline, of literally the data on these farmers. It was like, oh, rural Chinese farmers are doing great. And it was like, are you like, where on earth did that come from? Like, it makes no sense. And we know youth unemployment is high. And I always try to bring people back of like the layman event and crises. Like if you've ever studied economic crises, it's super fascinating. You could do a whole PhD on it alone. But economic crises and even this energy crunch and energy crisis that we're seeing right now, it's never one thing, right? The BP oil spill didn't happen. Macondo didn't happen because one thing failed. It's a number of things taken together. And actually, most people know about all this stuff. The people on the rig they actually knew what was going on with the BP oil spill. They didn't understand everything taken together. Same thing for Lehman Brothers. I mean, it wasn't just Lehman Brothers went under. I mean, you had you had a very insolvent mortgage situation, and you had a lot of people overstretched. And when that went under, and you adjusted mortgage rates, and they went up, and people who had multiple homes and did not invest properly. I mean, it took things out, and it impacted the economy. The same thing in China. I think what's really tricky is that because they're not transparent, because you don't have capital inflows and capital outflows the way we do in the US. And the reason why people like, the world likes US Treasuries is because of the deep and liquid market, and it's transparent. And so people put their money in it, especially everybody thought that the US was going to crash and the dollar was going to go away. And it was the rise of China, the decline of the US in 2008 because of this. Now, there are a lot of reasons that they actually still viewed it that way. And I think they were wrong because they're facing it now. But I mean, it was essentially like, well, the U.S. is failing. Still, we were the cleanest, dirtiest shirt in the closet, and people threw their money into the U.S. dollar, into U.S. Treasuries, because they believed it to be more stable than anything else. I think the tricky part with China is that you don't have that transparency. You still have this overwhelming exuberance by investors who see it as it's huge. It's a huge country, massive population, and therefore, if we're going to have growth in anything, if I'm JP Morgan or I'm Goldman or I'm whoever, I need to set up a wealth management office there. I need to do this. And you still hear this by every conference, every investor. It's always like, well, China we're worried, but, and there's this huge but. And it's like, well, this is how I'd invest. And the caution I have to everyone is that this has never played out. You've never seen, this is the Chinese story that's just playing out. And in history, when communist governments control the economy, it has never performed well for an investor. It's never performed well for the economy. And so you're actually seeing it of getting really convoluted and messy, where that common prosperity thing, which was mentioned, and it's not like this stuff isn't televised. There's a blog called Tracking People's Daily, which is great. And it's the guy that he was on a CSIS podcast that I listened to, and he actually just summarizes the People's Daily every day. And he goes out, so you can actually see, and it's just what the Communist Party is basically touting to people. So if you want to know what Xi Jinping is emphasizing each day, it's in the People's Daily. They're transparent about it. They transcribe his speeches. I actually have, the governance 1, 2, and 3 of Xi Jinping's speeches. You can read them. That's what and it doesn't matter if it's their translation. It's what they want you to see. And they're not mincing words on what they're actually doing. And so this common prosperity thing, I think, is very confusing for the market. It's not really confusing, I think, for Xi Jinping and for the Chinese government, because one, it is a maneuvering thing. I think they're trying to actually make sure that the lower end of the bracket, it has enough money and is happy. But the problem is they had so much growth based upon all these wealthy people and folks like Jack Ma. And now they're going after folks like that. And you can't have it both ways. You cannot have this massive economic growth and everything going crazy, and then you have all these crackdowns. And we also don't know what the people feel like about. We don't know how this is playing out on the ground. Do people like the common prosperity thing? Or are they concerned that they can't get wealthy? I mean, it's what people feel like in America when you're rising and you're going up an income bracket, and then you hear that your taxes are going to go up if you ever get wealthy. They're going to be, 80%, and nobody can make over 400,000. That's how you feel if somebody who's trying to climb the ladder. There's no point. And I think that's a reality in China is we have no idea how people are actually thinking on the ground.
And that's an interesting topic when you look at the shift in policy. So Deng, when he came to power and he was looking at things, his whole statement was let some get rich. And that was his whole thing. We have to let people make money. We need to stimulate and we have to reward the entrepreneur essentially. And that really became a founding drive of where they really started to see this growth. And now the pivot has been some have gotten rich and now it's time to share the wealth. And that's where you're getting this big pivot. And one of the things that we've seen it in the USSR, we've seen it before, when times get tough, you either get less communist or you double down and you get more communist. And they are doubling down, getting more communist, not less, because they're saying, well, you didn't do enough. Yep. Oh, you didn't sacrifice. You, comrade, you're the problem. And that's where you're starting to see some of this friction, as you were talking about. How does the consumer really feel about this? And depending on who you speak with, obviously it's going to vary. And let's just say what lines of communication you're talking over, because they have ears everywhere in terms of like, where is this fear? Because when you look at the consumer in general, consumption is really faltered. And I think the China Pboc does a really good job where they actually snapshot and they cut it and they take it offline and they show you, it's like, oh, they went back and they took down 2019 numbers. So it looks like they increased year over year, but it's actually because they took down the year before. But then they don't take down the actual GDP number that it was calculated off of. So they're just playing with numbers and playing with math.
Super common in Chinese data. So it's really hard. Like they'll just remove data if it doesn't fit the narrative or whatever. It just gets removed. And it also is a function of how messy their economy can be. So when we talked in the last podcast about like the coal reductions in certain places, I mean, and I said that it's a hatchet, not a scalpel, or like a hacksaw. I mean, it is not. You don't just go like the top-down measures that somebody says go do this. And it used to work for GDP. It'd be like go hit the GDP target, and so the local governments province would be like, yeah, well, we're going to go get above that GDP target. So we're going to roll this coal. We're going to do everything. We're going to grow. We're going to give all this property developers money. And then you grew like crazy and it was huge, but you had all these repercussions, including pollution and all kinds of things. Right. And so but all that data is that if you read that book, China Goes Green, it's a really, really good book in terms of the stories you get in terms of like how things play out on the ground. And that book, along with, and I mentioned a couple, there's Third Revolution and there's a couple others, just to give you like a snapshot in time of what's actually taking place within China. But the reality is these guys, we never actually hear through all this literature, for all this research, everything, we never hear about the consumer. We never hear about the state of like how the Chinese consumer is spending. And for years, what you have heard is that's the shift that the China's doing, right? That's how they're going to continue to grow and be prosperous, is that instead of exporting to America and Europe, they're going to focus on, it's going to be the U.S. consumer, the wealthy Jack Ma's and those people that are going to be buying within China, and everybody's going to be raising these poverty, raising up these poverty standards, and they're going to spend. They have lifted a ton of people out of poverty, so there's something to be said about that. But in tandem now with forced labor and all kinds of other issues, I think we really have to put that in context. And I actually don't think you can believe all of the data in terms of this lifting. But the problem is, without that transparency on the consumer, it gets pretty scary in terms of when all these other pieces are going on. So we know the energy issue going on within China. We know the prices of coal. We know that they have cities without power. We know that they are shutting down industries left, right, and center. We know that they have supply chain bottlenecks. We know when they shut down a factory in China, and then we know when they shut down a port, all this impacts, down the pipeline for the rest of the world. We know that shipping containers have skyrocketed in price. So we don't know exactly how does the Chinese consumer spend their money and how well internally is the Chinese economy doing. And I think I wouldn't say it's like the black swan, but it's the unknown piece when people are looking for that layman moment. If the consumer is not doing well and China can't ring fence this the way they say they can ring fence this property issue, just to bring this back, I think that could be not the single catalyst, but it's going to be that a few things that come together that could say, okay, this is much worse. And that's actually what starts taking down, that you start having contagion and you start having global risks and you start having actually concerns with energy prices.
And that's when you can look at the consumer and you can try to back into some of the data sets, and you can streamline it a bit, and you can see that they've essentially flatlined and they've deviated. If you chain it back to 2015, where you can say that there was some decent growth and they were really on the upswing, and then you saw like really 2014 into 2015 was this big move higher, and then they that was without as much stimulus. And then 2016 they wanted to goose it again, but that was when you started to see some deviation, and that was when you started to see some movements and shifts away. And that's when you start looking at the underlying strength of the consumer, and you can see it's actually moving, especially when you look at it on an average basis over the last 2 years, is falling in the wrong direction. But it's not. When you think of, well, how can you be so sure? Well, let's look at PPI versus CPI. It's the widest spread it's been since 1996, because they're essentially saying, look, you can't pass that cost on to the consumer. That has to get passed on abroad because the consumer can't handle it. And so they're like, all right, well, but if I can't sell it in the open market, whose margins is this going to get hit? And that's when you start seeing how they've reduced tariffs. They've given give backs on some taxes based on what size you are and what your volumes are, to try to keep some of these industrial manufacturing side of the equation continuing and going. But now it's actually dipping below where it was if you chain it back to 2015. So now industrial production and manufacturing is rolling over. Now, you could say, well, how can you be so sure? But there's some things that don't lie, and those are boats. You can try to hide boats. You can turn off your AIS transponder, but you can hope there's perpetual cloud cover. But we can always find those boats, especially when they're so close to the coast. And when you look at new imports, they're actually in contraction. So when you look at new imports that are coming into China, it's on a contractionary level. When you look at new export data, it's in contraction. Backlogs are going up. So if you can think about this in the way of, well, I'm not going to order something new if I'm still waiting on my backlog, to your point on
Right.
congestions. But there's also this slowdown on what's being brought into the country. And I think that is when you start to see some of this panic, because how do you stimulate when you have multiple sides of your economic machine, if you will, coming down? And then when you look on,
you don't stimulate, you get double down on your communist agenda, and then
right,
it gets messy.
and that's when you start looking at what they've done. When you look at 2011, just using 2011 to now, when you're growing at, let's just use a round number of 10%, but your debt to GDP is going up, it means that you're buying growth and you're not actually achieving it. So you're like, essentially, if you just simplify it, they're spending $3 to make one, where you should be spending $1 to make three. So they're going in the wrong direction. And this is during massive growth. So they were just tripling down on these debt levels to get to the other side. But at some point, you create a fiscal drag, which is what the PBOC is trying to address now, right, by draining liquidity, trying to keep credit impulses down, to take some of this excess debt out of the market and try to incentivize people not to roll it, or just to roll it, not issue new debt. But the problem is the consumer is sitting on so much of it, yep, that they're also going to be impacted by that as they're trying to find some sort of stumbling growth engine to really get the economy back to where it is, which is why 4.9%. I mean, just no. I mean, I think it's Brookings Institute did a breakdown over the last 20 years of Chinese data, and it says that you typically have to take it down by 2.3 to 3%. So no matter what you see, just assume it's worse by 3%. And just on average. And I thought that was interesting, because if you look at it, it's like, if you told me that they grew in Q3 at a half, 50 basis points to 100 basis points, okay, I'm not going to fight that. I think that could be a very doable number, but that then takes them that much further away from their target of at least 6.5% growth this year.
And that's why, so a few things just for the listeners is PBOC is People's Bank of China. Sometimes we throw out these acronyms, folks. So People's Bank of China, Deng was a former leader. So it's multiple previous leaders before Xi Jinping. And your comment that you just had on, I just want to come back remind me of the thought you just hadn't explained on this GDP, but the boats. I think the zero COVID case strategy has a lot to. So you always see these like wonky communist things like we're going zero COVID case strategy, and it is really weird because this is the country that supposedly only had 4,000 deaths from COVID, but built all these, incinerated a bunch of people. So we know that wasn't real. And we also know that that they locked people in their homes, and it was a really, really sad and horrific event. And then we also know that they locked people in, and so then they opened up, and people have been moving about and doing things. And only recently did they institute this sort of zero COVID case strategy. And you do have to. I'm really excited for this China beige book because I haven't come across it, but you have to be listening to all these wonky, different podcasts to hear these anecdotal evidence, like anecdotal things about. And it was one that I came across on the zero COVID case thing, and I thought, are they serious about this? And they've been back and forth. They've actually had politicians, different leaders within China actually get in trouble because they weren't pushing the zero COVID case strategy enough. And then Hong Kong, Carrie Lam, who's just a puppet for the Communist Party, she doubled down. She's the leader of Hong Kong. She doubled down on the zero COVID case strategy. So Hong Kong is implementing as well. Well, Hong Kong, used to be a major financial center and a free country. No longer is, since China has taken it over with their security law last year. But that is a huge ramifications when the zero COVID case strategy means that they're not letting nobody's coming in and out of China. So no foreigners are coming in and out. And you could say that's more of this doubling down these communist efforts, I think, as much as it is potentially concerns about COVID. But the zero COVID case strategy allows them to shut down a port. And so if you're talking about, well, we are trying to cook the books, or we just don't want people to see exactly what's happening, it helps to say, oh, we had a COVID case, so we shut down the port for 2 weeks. In reality, we may not have had enough activity to actually be moving stuff in and out. 100%. And so I think some of this, which is awesome that you illuminated that. So thank you, because that actually explains this a lot better, because I've been trying to think about that in context. And I also think that the narrative in the media has is bought and sold by pumps the China stuff way too much, and is way too, the media just does not criticize China at all. But I would say that, and you and I are never going to be allowed to go to China after all
well, I joked that that at this point I'm probably on some great list that I just should never be in that area. And I actually put out that February article podcast. And then the following day, a Chinese entity actually went in and hacked and tried to destroy the website. And luckily, like part of it, like we have multiple fail safes, but one of them is offline. And this one actually had a fingerprints of an actual human, not just a machine going through and just trying to do a denial service. And it's interesting just because you don't appreciate how much they probably know and listen and collect. And not to say that we're anybody at this point, because Kyle Bass is obviously going to be much, much higher on that target list. But the one thing that is interesting, and I've talked about what you're discussing in shows and insights, is that it's an outlet. It's okay, well, there's one COVID case, and it might have been like a relative of somebody that works at the port, but shut it down. Just shut it down.
Yep.
Excuses. They need excuses. They need to plug excuses on individuals. And when you look at Golden Week. So Golden Week was October 1st to 7th. They really tried to run a lot of things hard.
And just for the listeners, explain, you mentioned that in the previous podcast. So Golden Week is it's a big festival. It's a big event, right? It's a holiday week so people would be going out and spending lots of money, and things would be great.
Correct. They would be going out and spending money. You go and spend time with family. You travel. You typically go home for this, and it's a big spending period, because this is individuals going back to their roots. Families, spend a lot of money on food and having these big dinners. Right. But one of the things that typically happens is September is normally a very big month for China, because they try to get a lot of stuff completed ahead of Golden Week. And because there's so much backlog, there was so much that had to be done, you had this massive push that happened in September. And coming to your point on communism, they put arbitrary carbon numbers and electricity consumption numbers back in January. And the problem is they blew through them in September, because you had this massive push. So then all of a sudden you started to see like, oh, we have to take this down. And then obviously you had the electricity shortages because everybody was pulling at the same time. Back to your COVID points, there was a great article from South China Press talking about how there's all of these coal shipments that are stuck at the border between Mongolia and China because of COVID restrictions. And it's like they just can't get stuff through. So you have this huge supply chain error because provinces don't want to risk blowing up their COVID numbers. So then they do extra things that are stringent, and you get these backdrops. But underlying pieces, since September, you've had a big drop off in steel production. You've had a big drop off again in aluminum production. And there's a mixture of, well, is it because you made so much already?
Right.
Is it because you're slowing so much and you don't need it? Or is it just too expensive and you're like, you know what? I'm not turning this back on.
Well, if your thermal coal is 120 a ton, if
exactly.
your coal is 120 a ton, you are going to have some of those. But it's the chicken and egg, and like what caused it, I think, is what you're pointing out. And this is why it gets really hard to decipher this stuff. And no matter what, you can just pull yourself back and say it's a mess right now.
Mm-hmm.
Like it's a mess. And for a lot of us who've been looking at this, and this is the politics of it getting, I'll flag one other book, and it's Rush Joshi's Long Game book. So when you say, like, when we talk about like the Communist Party doubling down, he does a really fantastic job, and he does something that I've been doing, which is just going back to directly translated Chinese texts. It's fantastic because he's one of the first scholars that just says, this has actually been the game plan from the very beginning, and let me prove it to you. And it's extremely well done. So if you're questioning what's actually happening in China, he's not really questioning. He's just saying, doesn't matter who's in power. This was the plan from the very beginning, and so they're working it out. Doesn't mean it's not extremely messy to do this stuff with a big economy. It's really messy, and often what has happened under Xi Jinping is that he is a big, strong, powerful leader, and when he came in, he did remove hundreds and hundreds of officials with this massive crackdown. And so when he prioritizes something, people are actually quite fearful of it now. And so when he says this is important, and that goes down to a provincial level. So if it was, say, pollution, or if it was, say, hitting a target, that people need to hit it. And what ends up happening is that same thing when they, several years ago, they pushed small cities had been, when they're trying to impact pollution around 2008, for the Blue Sky campaign for the Olympics, there were cities that people froze to death because they didn't have the natural gas, because they shut down the coal. They got rid of the coal-fired power plants. They were supposed to have natural gas. The natural gas pipelines never came in. And these people literally froze because they didn't have it, because they shut down this power. And that was provincial leaders. So because the way it functions that way, it's very, very messy and very top down. Also note on the GDP is that the Chinese 14 5-year plan, which is, this is something from a Leninist, comes from the Soviet Union, these 5-year plans, those top-down measures. Those they usually have a GDP target in them, which is always, they always end up hitting that target. Ironic, 5 years later, they
amazing
hit it.
How that works, right?
Just amazing. It's shocking. They don't have one in this one. And I think that's because they know they don't have a GDP target. And people are like, oh, that's so great. It means that they're not prioritizing economic growth. They're going to be prioritizing the environment. And this is so awesome for CO2 emissions. And it's like, no, this has nothing to do with the environment. This has everything to do with it's so bad that they can't cook the books that much more, because you're not going to be able to say, well, it's 5% GDP growth and it's actually like 1 or 2%. And, right. For the listeners who say, well, what does this have to do with me? And what does that have to do is because if China is not growing at near 5%, and we know that they're not, and all this sort of, you see what's their actual coal demand, what's their actual natural gas demand, what's their actual oil demand. And that oil demand, I think, according to BP data, was 2021 or 2020 was the only country that actually grew, was 14.25 million barrels per day was their oil demand. They produce about 4 to 4.5 to 5 million barrels, 4.5 million barrels a day at most. And then the rest of that sort of imports. And we fudge with those imports because they've stockpiled so much crude, which was smart when it was cheap. And they can sort of use that number. And sometimes they stockpile to mask the data to make it look like they're importing a lot and they're growing economically. And sometimes they're just doing it because. But it's hard to really say, what is their oil demand? And they are an economy that you do have to follow the oil demand, because it is still a big piece, no matter how many electric vehicles they have. But it's huge because it's the growth story. And it's where, if you're going to have economic growth, and it's a reality too that prices are high. So it is impacting, like, oil prices, even if they're not passing those directly onto the consumer, it's hitting the government. And oil prices in China are high. So in Asia, where would have the oil demand. Prices are getting to the point, and have been getting to the point for the past several months, that they're getting too damn high, and they're starting to impact people's. They're weeding to their pocketbooks. I know I switch gears if you need to go back, and then we can.
Oh no,
Gears on inflation.
that's one of the big things. So one of the pieces that I look at that I get the most clarity on is what's happening in Shandong. And when you look at teapot refiners, you can get, so right now fuel oil was the tell right now, because fuel oil is the one that you can use and that you can see some switching. And when you look at what they're doing, they're hoarding a ton of fuel oil right now, especially at the teapot side, where it's the most ever that they've had in storage within this region. And the reason why that's so important is because they sell that into the country. So typically the state-owned enterprises and the state-owned refiners will purchase the fuel oil and then sell it and disseminate it internally, or recrack it into something that they can be used and be sold within the country. So the fact that they're sitting there and sitting on such a large amount of it, then when you look at what's happening with South Korea with a record amount of LNG in storage, Japan well over the 5-year average, a record amount with several nukes coming back, and they're still going out there and purchasing fuel oil. And then you look at what's happening between Europe and Asia, which is going West Suez to East Suez. You're seeing a big increase of fuel oil exports going from Europe into Asia and Fujairah at this point. And you're seeing some of this where they're looking at this and they're hoarding. And the question is there going to be too much? Like, are they going to hoard too much? And then you look at South Korea, Japan, India increasing run rates and trying to really focus in on that middle distillate side, because that's where they see, and that's where you can get some of the best margins. So a lot of this is happening before we've really hit winter. And the question is, then it obviously comes down to, what is weather? And if weather doesn't come through, or does that mean you're going to have some prices come down? You'll see some more growth coming out of China, because if they're not going to use it for heating, they'll use it to power some of these industries. Because right now there has been a big freeze.
Winter.
What's up?
This is a very important winter.
Oh, absolutely. I mean, and this is going to sound terrible, but I'm going to say it anyway. Unfortunately, it would be great if it was a cold winter, because it would show how these policies that have been enacted for the last 10, 20 years are finally coming home to roost. Now, we could get a warm winter and the can get kicked into next year, but we're still facing down the barrel of a gun that we're relying so much on renewables and peakers. And no matter what, there's just not enough redundancy in the system as we take baseload offline. So it comes back and forth to, do we have the come to Jesus moment now? Is it next year? Is it the year after? But that's what we're looking at this point. And when you look at LNG is kind of that pivot of how much backstop can we get, how much LNG is sitting, or natural gas is sitting in these regions. And unfortunately, just based on what we know with days of cover, a cold snap, which we'll define as something that comes into about 20 degrees Fahrenheit, the further you get below freezing, the faster that days of cover goes. So for an example, you look at propane, when you look at 3 days of severe cold, which we'll call 0 degrees Fahrenheit, can pull 10 days of cover out of storage in 3. So it's a number that's good to see, but it doesn't mean that it's perfect. And that's where it's going to be, as you said, it's a very important winter.
Okay, folks, my apologies for that abrupt ending with Mark Rossano. We had a long segment of part 2 with Mark Rossano, following up on episode 30. And we just recapped the all about energy and the all about China and the energy crisis, and we tried to put that together. The podcast actually kept going on another 45 minutes, and we thought we'd break it up for listeners and doing this in 2 parts. So part 2 is being broken up into 2 parts, and that was episode 31, recorded on Friday, October 22nd, with Mark Rossano. That is, and we recapped everything on China and the energy crisis. So catch us next week, and we will jump in right where we left off, and we will talk about inflation, all the inflationary pressures going on in the market, investor pressure, and ESG, and U.S. oil equities. Thanks, guys. Have a great week. Bye.